Welcome back to P Finance, your trusted chaperone in the wide, wild world of finance. We're here to empower your finances $1 at a time. Our mission? To provide you with the insights, strategies, and tools you need to navigate the financial landscape and make informed decisions. Today we're zooming in on a hot topic that's been making waves across the globe: Bitcoin. This cryptocurrency has been on a tear, breaking records and sparking conversations everywhere from Wall Street to your local coffee shop. But what's behind this surge? And more importantly, what does it mean for you? Let's dive in and find out. Hello, crypto enthusiasts! Today we're tackling the impressive surge in Bitcoin's price, which has recently crossed a whopping $72,000 mark. This bold rise has been fueled by a trifecta of factors that we're going to delve into: the advent of Spot Bitcoin ETFs, the anticipation of Bitcoin halving, and the growing perception of Bitcoin as a safe haven asset. But just like any roller coaster ride, this ascent comes with its share of risks. So, what's fueling this rocket? Let's unpack the reasons starting now. Spot Bitcoin ETFs are our first major game changer. Exchange-traded funds, or ETFs for short, are essentially baskets of investments that are bought and sold on traditional stock exchanges, just like individual stocks. They've been around for a while, enabling investors to diversify their portfolios without having to buy each individual asset. But here's where the game changes: Spot Bitcoin ETFs. These are ETFs that directly hold Bitcoin. They track the actual price of Bitcoin, rather than derivatives or futures contracts. This means that the performance of a Spot Bitcoin ETF is directly tied to the performance of Bitcoin itself. It's essentially a way of investing in Bitcoin without having to deal with the intricacies of buying, storing, and securing the cryptocurrency yourself. So why is this a game changer? It's simple. Spot Bitcoin. ETFs have made Bitcoin more accessible to a wider range of investors. They've opened the door for institutional investors, like pension funds and endowments, who were previously hesitant to dive into the complex world of cryptocurrencies. Now, these investors can get a piece of the Bitcoin pie without having to navigate the intricate world of crypto exchanges, wallets, and private keys. Not only does this make investing in Bitcoin easier, but it also brings a level of legitimacy and credibility to the cryptocurrency. After all, being listed on traditional stock exchanges alongside tried and true investments can do wonders for Bitcoin's image. But the real impact has been on Bitcoin's price. As more and more institutional investors have started pouring funds into Spot Bitcoin ETFs, demand for Bitcoin has skyrocketed. And as any first-year economics student can tell you, when demand goes up and supply remains the same, prices tend to rise. This ease of investment has led to a surge of institutional funds into Bitcoin, pushing demand and prices higher. So Spot Bitcoin ETFs have not only simplified Bitcoin investment but have also played a significant role in the recent price surge. But remember, the story doesn't end here. Stay tuned for the next chapter. Next is the Bitcoin halving, an event that slashes the reward for mining new Bitcoins in half roughly every 4 years. This is a critical event in the life of Bitcoin and has far-reaching implications for its value and the crypto market at large. You see, the Bitcoin network is designed with a built-in scarcity mechanism. When Bitcoin was first created, miners, the people who process transactions and secure the network, were rewarded with 50 Bitcoins for each block they added to the blockchain. However, this reward is designed to halve roughly every 4 years, in an event known as the halving. Why does this matter? Well, it's all about supply and demand. The halving reduces the rate at which new Bitcoins are created and enter circulation. This is a significant event because it directly impacts the supply side of the supply-demand equation. Now, let's talk about demand. As more people become aware of Bitcoin and interested in owning it, demand increases. This is partly driven by Bitcoin's growing popularity and acceptance as a legitimate investment and store of value. So what happens when you have rising demand and slowing supply? You guessed it, the price tends to go up. This is exactly what we've seen in the past. The previous 2 halvings in 2016 and 2020 led to substantial price increases. Furthermore, the anticipation of the halving can also drive the price up, as investors predict the supply decrease and its potential impact on price. This speculative aspect can lead to price volatility in the lead-up to the event. But remember, while the halving has historically been a catalyst for price increases, it's not a guaranteed outcome. The crypto market is influenced by a multitude of factors, and while the halving is a significant one, it's not the only one. With fewer new coins and growing demand, prices tend to rise. It's a classic case of scarcity driving value. Our third factor is Bitcoin's growing reputation as a safe haven asset, akin to digital gold. In a world where economic uncertainties are as constant as the rising sun, investors often seek out stable investments that can weather the storm. This is where the concept of safe haven assets comes into play. Traditionally, these have been things like gold, silver, and government bonds. But recently, a new player has entered the field: Bitcoin. It might be surprising to some considering the notorious volatility of cryptocurrencies. However, Bitcoin has been showing characteristics of a safe haven asset, particularly during times of financial stress. Just like gold, Bitcoin has a finite supply. There will only ever be 21 million Bitcoins in existence. This scarcity is a key feature of a safe haven asset, as it provides a buffer against inflation. Furthermore, Bitcoin's decentralization makes it immune to government monetary policies or geopolitical tensions that could affect traditional assets. Its digital nature also means it's highly portable. You could essentially carry a fortune in Bitcoin on a small hard drive, or even remember your Bitcoin wallet's private key in your head. Try doing that with a bar of gold. Of course, it's not all sunshine and rainbows. Bitcoin's price can fluctuate wildly, and it's not uncommon to see it swing by several percent in a single day. But then, even gold, the quintessential safe haven, has had its ups and downs. What makes Bitcoin unique is its potential for high returns alongside its safe haven status. This is a combination that's rare among traditional assets. It's this unique blend of features that is attracting a new wave of investors who are looking for stability in volatile markets, but also want the potential for significant returns. So, in conclusion, Bitcoin's finite supply, decentralization, and portability offer a modern twist on the traditional safe haven, attracting investors looking for stability in volatile markets. It's a digital fortress, a sanctuary in the stormy seas of the financial world. And as we navigate these uncertain times, it could be a beacon of stability that many are looking for. While Bitcoin's prospects are exciting, it's not without risks, volatility and regulatory uncertainty being the main concerns. The crypto market, including Bitcoin, is known for its wild price swings, which can be a double-edged sword. On one hand, you have the potential for significant returns. On the other, you face the risk of substantial losses. Additionally, the ever-changing regulatory landscape can impact Bitcoin's value and acceptance. It's crucial to be well-informed and consider how Bitcoin fits into your broader investment strategy. In this whirlwind world of cryptocurrencies, staying informed is your best defense. We hope that this video has shed some light on Bitcoin's current landscape and encourage you to continue your research. Remember, investing should never be a gamble, but a calculated decision. Thank you for joining us on this journey into the world of Bitcoin. If you found this video helpful, please share it with your friends, family, or anyone who might benefit from this information. Don't forget to hit the subscribe button to stay updated with all the latest financial insights from P Finance. We're here to empower your finances, $1 at a time. Until next time, stay informed and invest wisely.